Hi there, Serial Trader here. I want to have a look at the major US indices and we'll jump right in here to the 2-hour chart on SPX. So since the last video, so far things remain intact. The key level to hold was that low we put in there at 4,056.88. And we did get a deep retracement from our initial move off that low, but it technically held. So that low came in at 4,061.41. So again, higher than the 4,056.88 low. So I can still, at this moment, call this wave 4 complete there. And then we had the initial 1 up. We had an extremely deep wave 2 down. Almost a 100% retracement, but still actually held the low. And now we're starting this third wave up of what we're expecting for this larger fifth wave to perhaps finally finish our upward sequence that we've been in since at least the March 2021 lows, and again, possibly finishing some larger degree sequences, but we'll have to see. So this remains intact as long as we hold, well, obviously, this level is now a must hold, 4,061.41, and of course, 4,056.88. So those two levels, as long as they hold, this to me is the preferred interpretation. And it would just be ideal to have us go and peak out towards month end or early in June there. That would be nice. So still currently on track for this to happen. But I will bring up a potential alternate just to have in the back pocket here. And I'll also explain how I've positioned around this. So again, this is what I'm currently favoring. But here's what I think is a viable alternate interpretation. And that is where from our March low, we got 1, 2, put the 3 there as ending. Then we have this A, B, C, D, E triangle 4. And then we had this very brief, but still technically valid fifth wave. And now we're actually beginning something potentially larger to the downside. One thing I don't like about this is just how weak and also short in duration wave 5 would have to be compared to wave 1. That's not good proportion in both time and price. So that is why I don't particularly like this interpretation, although I can't discount it until we really get up here and start making these higher highs, right? So if this is the case, and it could be, even though it's not my current preferred scenario, it's definitely alive and well until we actually start getting up here and invalidating. So in this case, we made some sort of important top there in a fifth wave, and now we've got either an A or 1 down. So far, we have a 3-wave move up for either a B or a 2, and then you'd be looking for another leg down in either a wave C or a 3. And obviously, if it's wave 3, if this is the 1, 2, 3, 4, 5 down in progress, then it's an even larger degree correction underway. But of course, we don't have that information to make that assessment yet. So far, you can make the argument that we have 5 down and potentially 3 up. And I mean, just viewing this on the 2-hour, one thing that one thing that this has going for it, perhaps you could say, is this looks like a 3-wave move up, and then a 3-wave move down, and then a 5-wave move up. That would be a 3-3-5. So what pattern would that be? Well, it would be a flat pattern. And if that's the case, now so far we're just contained within this parallel trend channel, okay? And I'm seeing what you could easily call, I think, AC equality. Look at that. We've rejected basically right off that AC equality level. Now let me just put some subwaves in there for you to be more specific. A, B, C of either B or 2, and let me just drop that degree. There you go. Let me just get this up here a bit, make some room. So you could easily consider this ABC up for B or 2, especially given that we have AC equality and we are at least currently coming off that level. So to invalidate this, we really got to go break out above this channel and certainly break above that that high we put in there on Friday at 41.8872. Once you break that, then I think we're more confidently in the bullish camp. But right now, I mean, if you want to go short, that's your level to short against right now is 41.88, and currently we're only down, you know, a small amount from there. So decent risk reward ratio if you want to initiate a short, put that as your stop, and be targeting some lower levels, right? And let me just put even further subwaves in here to show you what I mean. Got the A, B, C up for the A. Again, if this was the correct interpretation of it being a flat, and then we would have the ABC down for the B, right, like this, and then you'd have to go in and on a smaller time frame, but you can definitely get a 5-wave move out of this. How about I just do that and go in on the smaller time frame? 15-minute will probably do the trick. Okay, so let me just yeah, okay, 15 minutes, that should work. So you can get the 5 out of it for sure. I think we'll do the 1, A, B, C, expanded flat wave 2. This would be the 3, then A, B. Perhaps some sort of little triangle here. Anyway, wherever you put the 4, it doesn't really matter. You can definitely get 5 non-overlapping waves for this. And let me just, again, get this degree down. There we go. Okay, that works for me. Now let's go back to that 2 hour. So you see what I'm getting at. You can definitely make the case. Now, I didn't go in and do it, but you could obviously, in either scenario, this is definitely a 5-wave move down. Now, whether that's 5 waves down, like in this scenario for wave C of a expanded flat wave 4, okay, or whether it's 5 waves down for either the initial A or 1 of a, you know, downward trend in progress here. Either way, you get that 5 down. But I haven't done the sum labels here on this, but you get my idea. Okay, so what have I done with this? Well, as far as trading goes, so I'm long a bunch of 4,200 strike calls that expire this coming Friday, so May 28th. And that's the futures calls, so ES calls. So I'm long a bunch of those 4,200 strike calls, and I'm short a smaller number, but still reasonable number of futures. So long futures calls and then short actual futures contracts. And my reasoning behind this is, okay, so going back to what I am currently leaning on here, which is still the bullish scenario of one more wave up for wave 5. If this plays out and we get a nice move up to you know, well above 4,200 towards the end of this coming week, then those calls, since there's more of them than the equivalent futures that I'm short, they will more than offset the losses of being short those futures contracts, and then they will actually continue to gain delta, even though the delta on the futures contract is obviously just fixed at whatever it's at. So 1, 2, or 3, or 4, however many contracts you're short, the delta doesn't move at all. It just stays fixed. Whereas the delta on the calls, obviously the closer to and then deeper in the money they get, the delta will eventually, you know, basically become close to 1, as close to 1 as it possibly can. But if we actually do go down, here in this scenario, then those calls can only lose as much as they were purchased for. They can't keep losing past that, but the short futures will just keep steadily gaining value since they have that fixed delta on the way down. So it's kind of a hedge play, just due to the fact that we do have 2 very viable scenarios in play. Now again, even though I would say I'm kind of 60% in favor of this one, so I am currently favoring this one, but hey, I'm still not going to discount the 40% chance or so I'm giving to this more bearish scenario. So because of that, I've positioned for both. So I guess the worst thing that could happen to me this coming week into the, you know, close of Friday will be if we just stay in a congestion sideways range without breaking any of these levels up or down. I don't think that's going to happen, but that is, you know, the worst case scenario as far as that position not working out. And again, it would still just be a matter of the debit I paid on the calls being the loss, and really not much else. So it won't be too bad either way. But yeah, I do think this week we're going to get either that, either this bearish scenario and we finally break these levels and actually get some downward motion in the market, or we do finally get out of this range we've been in and make some higher highs above 42, 42.38 or so. Okay, so that's really what I'm looking at here on the S&P for what it's worth. Now let's go over to the Thinkorswim Candlestick chart and just look at some other items. So, okay, S&P, SPX, daily candlestick chart. So we are above the T line here. We still closed above it there despite a little bit of weakness on Friday. Friday was options expiration, so a little bit of intraday volatility, but closing almost flat. That's often the case when you have options expiration. But, I mean, we've been treating this 50-day simple moving average as support. You can see, again, we did a bullish hammer there. I believe that was on Wednesday off that 50. So, it still has me leaning towards that bullish scenario, but I'd say only about a 60% confidence level on that. And you can see we are kind of getting some resistance at the 20-day simple moving average. So we need to get above that and close above that to kind of solidify some new highs coming here. Weekly chart here on SPX. Okay, so all that really stands out to me is some lower shadows. So on the weekly level, we have been rejecting these lower prices, and we are staying above on a closing basis the weekly T line. So no real concerns there or signals on the weekly. And of course, being the larger time frame, a lot can happen on the daily before the weekly gives you much of a signal. Okay, so the Dow Jones Industrial Average, basically the same idea here. I don't really have to go into much detail on the Dow, as it looks very similar at its current juncture to the S&P, and even the weekly chart, very similar weekly candles these last 2 weeks here. So I'm not going to worry too much about the Dow. I don't typically trade it anyways, but just looking at it in case it gives some clues or something stands out, right? Sometimes one index will give more of a clue than the rest, and then you maybe need to pay attention to that. But in this case, not really on the Dow. Okay, so on the Nasdaq Composite, so again, I made the case that this could possibly be an important low. And again, this is going to depend on how the whole market goes. So potentially we're working 1, 2, and working a third wave up, although haven't seen any kind of third wave strength yet to enforce that. Or this is just another ABC up, and we're going down again, maybe back towards that 200-day simple moving average. So Nasdaq basically looks more indecisive actually than the rest of them. Certainly nothing here to, you know, if the Nasdaq was already taken off strongly or something, I would say that'd be a nice clue that the rest of the market is going to break bullish. But here we're not really getting any decisive signals. Weekly on the Nasdaq, let's have a look. Okay, so on the weekly, not much to remark on. Again, some lower shadows. I guess it was a slightly positive week on a closing basis. Not much else to say about that. We are closing below this weekly T line, so you'd like to get back above that to kind of enforce some strength. But again, not any real strong signals that I'm seeing here as far as overall market direction here, looking at the Nasdaq chart. Not for now. VIX. So the VIX, we had that spike up, big rejection. So far just a lower high and tanking back down again. So the VIX kind of has me leaning towards the bullish scenario because the VIX is showing weakness. So as long as the VIX is downtrending, that's typically good for the market to carry on with an uptrend. So VIX is kind of a check mark in the bullish camp, at least viewed as a standalone indicator right now. Let's look at the VVIX tool, and that is currently in a more bullish mode. So we never really had, since our last signal, any kind of divergence between VIX or VVIX. You can see they're both behaving almost identically recently. But VVIX is technically back below the red moving average. SPX is still currently above the blue moving average, so that, at least for now, is in a bullish mode. So again, that has me slightly favoring the more bullish scenario. But just going back here, just to reiterate, I think this coming week, as I mentioned myself, just have both sides covered. I mean, it's not that, especially, I mean, implied volatility is fairly low, especially on shorter term, or the premium you'll pay, especially on shorter term options on SPX or ES or SPY. It's pretty reasonable right now. So if you want to go long, I would just make sure that you have that hedged with some puts, or in my case, I've gone long via some calls and I've hedged with some short futures. So take your pick. I think my decision on that was mostly based on the implied volatility being cheaper on the calls than on the puts, which is usually the case. You have the volatility skew on well, SPY, SPX, and ES options. The volatility skew always has the out-of-the-money puts being more expensive than out-of-the-money calls. So in this case, I expressed the potential bullish scenario with some out-of-the-money calls, hedged it with some actual short futures contracts. So that's how I'm playing it. And basically, as long as we get some reasonable movement after a breakout to the upside here or a breakdown to the downside, either of those scenarios will serve me just fine this coming week. The worst case scenario for me is be staying in this more sideways range, which I doubt will happen. But that is my worst case scenario, at least for the next week. All right, that's good for now. Serial Trader signing off.